All right, hey everyone. I think I'm going to start calling this Investment Tuesday. We used to call it Live Stream Tuesday. We're going to call it Investment Tuesday. And today I'm going to go back to a familiar format of talking about particular sets of opportunities and the kinds of opportunities that you guys really love, which is these low stock price. Yeah, these low price stocks is what the right word. Penny stocks. Yeah, under $5. I always know that like anytime I make a video on these, people watch, and I always want to throw out like just stocks that are under about dollar. I want to present like an actual real opportunity that I think has an actual shot of happening. And remember, hey, my track record is pretty good with respect to these things. So this week, let's focus on a part of the stock market that no one is talking about. I'm going to give you a little bit of macro construction for this, which is like why this opportunity has become what it is, and how it also makes like some sense within the construction of like what I've been talking about, which is that in my opinion, the old bull market is over and there are new bull markets, crits, multiple, plural markets that are taking its place. They are in small cap stocks, they are in innovation and growth stocks, and they are in some number of international stocks. Today's companies fit under secret bull markets number 1 and 2. They are small and they are definitely in innovation. And if I'm right, they'll also end up in growth. Right now, definitely where they are, they're not growing, right? And that's the opportunity, right? In other words, I'm going to make the case that there's something going on that can flip the script for these companies. And then if I'm right, they go from where they are, which is like somewhere, they're like a little bit under $2. They're like, solidly in the $1 category, right? Okay. But before I do that, let me do the legal disclaimers and disclosures, which is that this video and the content from ATG Digital is not investment or financial advice. It is presented to you as opinion, information, engagement, and entertainment. Whatever you choose to do with it is your responsibility because it is your money. And next, all ATG Digital content may contain errors, oversights, and mistakes. Understand that investment operations, which is buying or selling a stock, option, crypto, etc., have significant risks and can lead to the loss of your principal. You can lose money if you choose to use the information in this video. I, the owners, employees, contractors of ATG Digital, own, trade, transact in the securities that are mentioned in this video, and all the content from ATG Digital. We do not take money from companies or from crypto people, sponsors, promoters to recommend their stocks or crypto tokens. Next, quick plug for various free content that we put out. There's the Substack, there's the Spotify podcast, Ballman Speculating, and there is what I'm on right now, which is YouTube. Next, social media. I am very active on X, posting on all kinds of things. When Bitcoin prices and many of our stocks are flying, I'm on Instagram, and then Dean and I are on Facebook from time to time. If you want subscriptions that give you more of what you see for free on YouTube or on any of our various free content, well, subscribe to atgdigital.media. We have subscriptions that begin at $9.99 per. Okay. All right. Before I go into this, let's just set up the real estate markets as they stand today in March of 2025, which is that we've got two markets, right? One is the market for new home sales, which is doing perfectly well. And then we have the market for existing home sales. And let me put up a couple of things to make the point as to where we are for existing home sales. The reason why we're at this, which is US home sales in 2024, fell to the lowest level in nearly 30 years, right? I mean, that's whacked, right? I mean, 30 years, like, so that's what, 1995, right? I mean, okay, it's 2024, so 1994. Yeah, 1994. That's how, bad home sales are. And why is that? Why is that? And I'm just going to put up, while I talk about this, put up a different number as well. And you can see that, yeah, that's US existing home sales. This chart goes back to the 1990s, something in that range. Let's see, how far does this go? This goes back to 1999. So you can see the big spikes down. That is the global financial crisis. Turns out that wasn't the bottom. The bottom actually came in 2010. I actually was a buyer of a house, yeah, about this time. A little bit, yeah. I mean, I bought it a little bit before, so I didn't capture the low, but I was a buyer of my very first house after the global financial crisis in 2000. Yeah, it was late 2009, early 2010. And then we've got this spike down of that's the COVID crash, when we were all locked down and nobody could really build a house. Nobody really could buy a house. But then there was the COVID boom. And then we are come back and we're scraping along the bottom here, which is as a result of interest rates. And here's where we are. All right. What is going on? Well, what happened with the COVID housing boom is that interest rates crashed. People desperately wanted houses. We had a change in job structure. We were all working from home. People like, I can work from anywhere. And it stimulated this enormous boom. Prices rocketed higher in most places by 50, some places 100%, some places maybe even 150%. And it totally threw the real estate markets out of whack. It didn't stop people from buying. And then the Federal Reserve started raising interest rates, and mortgage interest rates went up to about 7%. And with that, the boom, yeah, kind of ended. Now, today we're in this place where we've got a lot of people that bought homes in 2020 and 2021, often for very high prices, but with very low mortgage rates, like 2%, 2.5%, 3%. And today we have some reversal of some of the conditions that drove all of that home buying, which is that, yeah, so many companies are recalling employees and be like, hey, you want to keep your job? Come back to where your physical job used to be and do it from there, and show up in the office 3 days a week, 4 days a week, 5 days a week, something like that. All right. We've also got, we've got the millennial generation and Gen Z in their household formation years. Some of them are beginning to have families. Some of them are beginning to change jobs, and you got to sell your house. They don't have enough money to keep the houses. And then there's also, some number of people that thought that they could build an Airbnb empire. In other words, there were so many different things that makes people want to have to sell a house, except that the existing home sales market is frozen. It's frozen. And it's reflected by those headlines I put up, which is like, US home sales are really down to like 30-year levels, right? I mean, they're back to 1994 levels. In other words, it's very difficult to sell a house today. It's very difficult to sell a house today. Why? Because the sellers are locked on prices that used to exist in 2020, 2021, and they have mortgages based on the interest rates from that time. The buyers today are like at mortgage rates of whatever, 5, 6, or 7%. I cannot afford to buy your house at this enormous price. So we have this standstill, right? I mean, that's there, where The buyers want to sell the sellers want to sell at prices that are too high. The buyers want to buy at prices that need to be lower, or we need some mix in between. We need slightly lower prices and we need slightly lower interest rates, and we can maybe come to some accommodation somewhere in the middle. During all this period, there's been substantial changes in the entire real estate market. Commissions have been cut for real estate brokers. And there is also an enormous devastation that has happened because of the decline in sales among mortgage bankers, among real estate agents. Essentially, this entire business has gone through an extraordinary, workout. There's far fewer people in it because, truthfully, right now, obviously, with the number of transactions being down, it's very tough to make a living. It is, in my judgment, a perfect point where people are going to be open to change. People are never open to change when everything is booming, the way that things are going is working, everybody's just fine. They're like, no, why change anything when it's working? But nothing's working today, right? Houses aren't selling. People are stuck in houses, not able to move on with their whatever life circumstance it is, change of job, wanting another house because they've had a child, or whatever the case is be, no longer wanting to run an Airbnb empire, whatever it is. The housing market is stuck, and it is primed for change, right? And that's where these two companies come in, right? These two companies were seeded with an idea that, like, hey, there are other ways by which you can transact what is obviously a physical asset and a financial asset, right? A house is not just a physical asset, it is also a financial asset, right? For the vast majority of Americans, house represents a significant amount of their net worth, especially if you're older. And unlike most financial assets, houses are one of the last assets that is run, operated, transacted like it was 50, 60 years ago. It's kind of like the internet really kind of never happened. If you today want to sell a house, here's the process, right? You go and find usually a local real estate broker. Your house is now put on MLS. And then from there, it goes on to sites like Zillow and Realtor.com and others, which are sort of like media distribution outlets, if you will. But the basics of how from there it happened, the transaction happens, is pretty much from 50, 60 years ago, which is that you got to find the one buyer that wants to pay your price, right? And there's really no opportunity to really show this, to kind of like sell this out and just be out like the way you can in the stock market, right? Go with me on this. People, you're like, Paul, houses, stocks are the same. Listen, if you were transacting in stocks in the 1950s and 1960s, you'd call your broker and you'd be like, yeah, I want to sell my stock. And the broker would be like, oh, okay, yeah, let me get on the phone, or maybe they used telegrams back then. But either way, essentially, let me wire up my network and find out if there is any interest in your stock. There was no liquid market for all stocks. So you might wait days, maybe even weeks, potentially months for some of these very illiquid stocks to be sold. In other words, you needed to find the perfect buyer, somebody that wanted your quantity of stock at the price that you want to sell, or obviously there would be some negotiation on the price. But either way, it's a one-to-one transaction. It takes a very long time, requires a lot of intermediaries, and that system was also extraordinarily expensive. I mean, commissions in that era were 20, 30, 40, even 50%. That's correct, commissions. In other words, to transact a stock, you paid 20% of the value of the transaction. Yeah, it's true. Go look it up in the history books. I mean, I got all these books. You can go look it in there. Today, remember, there's no commissions on stocks, right? When we don't pay any commissions, there is still a bid to ask spread, right? In other words, there's the asking price that is set by the seller and the bidding price from the buyer, right? That construction is there in every market, but there are no commissions. And also, in the stock market, you no longer need to identify the one perfect buyer that wants your quantity of stocks at the price you want to sell. The companies I'm talking about want to bring this to the real estate markets. And I can already hear everyone's objections. Paul, there's no way. Real estate is different. It's been done this way for all this time. That was all true for the stock market for a very long time. As all true, truthfully, even for various commodities markets where there is a physical product, right? I mean, it's not like, this is just, many people think like, oh, it's never happened before. No, many physical products have gone digital and gone to a intermediary market. In other words, the housing market can work where, hey, I want to sell a house, and you're not necessarily finding the end buyer. You're finding an intermediary that is willing to take your house and give you a price. Now, the other objection that people will bring up is like, well, these people will give you a price, Paul, that is much lower than what you can get. Yes, that is the nature of things. Remember, when they give you money, they're going to have to sit on your house potentially for whatever, 1 month, 3 months, 6 months. So they got to pay interest or carrying costs for keeping your house in their inventory. They're going to have to maintain the house so that when they go to sell it, it's in good condition. That has a cost to it. And there is the effort of actually finding this buyer, right? I mean, they are taking on all of those jobs. You can choose to take on those jobs, but then obviously you then get the higher price. So it makes sense why then they would offer you a price that is lower than the market price. Would people be willing to accept it? That's the big issue, right? I think some number of people, especially in the current environment, in other words, they're frozen in place, they're locked in place. Yeah, they can't really find a buyer that is willing to buy, either because their information is not getting out to them. However, a middle person, an intermediary, a dealer coming in and saying, hey, we're going to give you, I'm just going to throw this out there, 90% of market, because that's where we think we can, go back and put this on the market and over some period of time, make enough money that it's worth our while to do this. I think some number of buyers are going to engage. They're going to engage. Why? Because things are very extreme. We're at 1994 home sales levels, 1994, right? And this is the kind of environment in which things will flip. All right. So that's the macro scenario, right? I just want to throw another detail in, which is that I said there are two markets. One is for existing home sales and new home sales. New home sales are marketed by these big home builder companies, Lennar, Toll Brothers, KB Homes, NVR, etc. They sell their own homes, but they once this market gets going, I'm pretty sure that they too will sell into this market. But right now, I'll say that the opportunity is among existing home sales. Existing home sales means that homes that you and I own and that we want to sell to somebody else. So I believe that's where right now you've got the greatest amount of frozen homes where people, some number of people, they're like, hey, I'm open to a new solution.
Hey, it's Dean with ATG Digital with a quick break. Please forgive me for being sweaty. It's just that our Platinum Tier model portfolio is just on fire. For access to our options portfolio and research, click in the top right-hand corner. Thank you for your time, and back to Paul's video.
I'm open to a new solution. And that's where these companies come in. All right. Let's do the big reveal of what these companies are. Well, company number one is Open Door. Right? Okay. I told you it's a $1 company, and sure enough, it's trading for $1.15. But please note that this company has a market capitalization of 828 million approximately. And this is something I like to mention every time, which is that the stock price does not determine the size of the company, the market capitalization does, right? And within the scheme of the stock market, I also want to make this point, which is that you might think 828 million is a big company. It is a tiny, tiny little company. Apple is worth $3 trillion with a T. So for this to become a $8 billion company, that would be 10 times. To become a $80 billion company, that would be 100 times. For them to become, a $1 trillion company, that would be 1,000 times. Yeah. So, I mean, just understand this is a very small company within the current construction of the stock market. All right. It's $1.15. The second company, which is somewhat different, they operate more in the rental markets, but nonetheless, I'll throw this in there because a reconstruction of the real estate markets will take all of these new real estate companies along with it. And I'm going to show you my little like tracking of 4 companies that belong in this. In there. So OfferPad is another one. And here you'll see the stock price here is $1.68. And then you'll also see that the market cap is 45 million. I mean, 45 million is, that's not even micro cap. That's nano cap. When we're talking mini, tiny little company. I mean, if Open Door is a small company, this is like, and that's like a kind of like a big ant. This is like a tiny ant. All right. Next, let's look at what these stocks have done over the last 5 years. Now, they've sort of like gone along for the ride with COVID, right? You can see the blue line there is Open Door. The green line there is OfferPad. And you can see that Open Door had like a little mini boom. They came public in 2020. They participated to some extent in the COVID boom. OfferPad had this little spike in 2021 when pretty much, I guess that was the sort of like the GameStop market, when pretty much all stocks went up. But since then, it's just been destroyed. I mean, it is down 99% from its IPO price. Open Door is down 90%. It says 89.4% from its IPO price. So, I mean, these stocks have been devastated, destroyed, obliterated, right? I mean, so it's, I think, fair to say that people have kind of given up on these stocks. And let's look a little bit at their financials, all right? And I'm going to anticipate your objections. And this is Open Door. They have about $5.15 billion in sales as of the end of 2024. And I'm just going to change this so that we see this as annual year-to-year growth numbers. And I'm going to increase the size here. And you can see, I mean, negative 55% in 2023, negative 25% in 2024. And people are going to be like, Paul, you're crazy. Why would I buy that? Remember, bad news and low prices and even more low expectations, they go together, right? The reason why it's down 90% from its IPO price is because of this, right? So, yeah, nobody at present is thinking along the lines of what I'm presenting to you today, which is that what if the current market is willing now to accept the innovation of a intermediary driven market? It doesn't need to be everybody. It doesn't need to be 100% of the market. It doesn't need to be 50% of the market. It doesn't even need to be 25% of the market. If I'll say 5% of people are willing to engage, yeah, it's going to be huge growth for them. Huge growth for them. So at current prices, all we need really is like incremental movement. In other words, if over the next couple of quarters, they're like, hey, we're starting to see some nibbles here and things are starting to get less bad, the stock's going to move up. It's going to move up. Less bad is very powerful when you're talking about a stock that is at a low price, that has an extraordinarily low valuation relative to a successful future, and that has very low expectations. Yeah, less bad. That's all we need. Less bad. Less bad. Let's look at why I say this has low expectations. Obviously, it has a low stock price, but look at this. It trades for 0.16 times sales. 0.16 times sales. We have stocks in the stock market that trade for 70 times sales. This trades for 0.16. Open Door trades for 0.16. And you can see during the period, back to 2020 or so, it was much higher. Good news goes with higher prices and higher valuations, just like bad news goes with lower prices and low valuations. So into any improvement, the price to sales ratio, which is the valuation that matters for growth companies, will start going higher and will take the stock price higher with it. If the results improve, now you've got two levers, if you will, two elevators, both moving higher, which is that their sales are going up and the price to sales ratio is going up. Both are going up together. Stock price starts to zoom higher. That's what we're looking for. Can I guarantee that's going to happen? No. Every objection you might have, Paul, these companies are terrible. It's never going to happen. They'll obviously lose the reason why they don't have any sales because nobody believes it. All fair enough. You know what the thing is, though? Nobody has priced any of that in. It's not priced for success. It's priced for failure. It's priced for failure. If we can have some small movement in their direction, small improvement in their business. Yeah. All right. I'm not going to repeat the entire analysis for OfferPad other than to show you its business in the same way. Let's look at, here's the annual growth, but let's start with just an absolute, how big is their business? In 2024, OfferPad had 918 million in sales, and they lost a good, nice chunk of money. And if you want to see what's the state of growth, negative 66% in 2023 and negative 30%. So bad news. Yeah. I mean, and then let's go and look at valuation levels. Price to sales ratio 0.05, folks. 0.05. 0.05. So I'll say that there is very little hope in the price of OfferPad as it currently stands. In other words, no one believes in anything of what I am laying out. No one thinks that these companies actually have any shot, or whether it be their technology or truthfully, even the real estate market's coming back. Even, they don't have to take any market share. No one really thinks that the existing home sales market can come back. But the truth is that if President Trump wants a growing economy, you got to get housing back on track. Household formation is one of the critical factors in economic growth and GDP growth. You got to get it back. And if household formation is critical, and then existing home sales is critical, you got to unlock it. And that means, yeah, the government is going to make some effort to try to, like, unlock this market, unfreeze this market. These companies benefit. These companies benefit. Remember, I mean, the same thing that I've mentioned for Open Door here, which is why we got, two elevators, right? If the revenue goes up, the price to sales ratio goes up. The more the revenue goes up, the higher the price to sale ratio goes up. With that, you get stock price up and to the right, up and to the right. All right. Okay. Let me now move on to, I said that I kind of track the new property companies that in some way, shape, or form are trying to do something different. It could be simply by implementing a digital platform to their existing business, which is just much more efficient, much more online, and most younger people want more online. They want things to be more efficient. So we got these companies here that are participating in this. Just lost track of. I'm going to just make these a little bit bigger. We've got Compass. We've got Zillow. Zillow is, a holding at ATG Digital in our silver tier. OfferPad and Open Door are also holdings. But you can see that the state of these four stocks are in completely different world. In other words, Compass is within 14% of its 52-week high. Right? I mean, I track stocks in this way within the construction of 52-week highs and lows. And Zillow is within 21%, but OfferPad and Open, 80% and 64%. Why bring this up? Well, look, if the real estate market is gone for good, it's over, forget it. Everything I'm saying is just junk, right? Oh, what? I mean, who's buying Compass at, like, within 15% of its 52-week high? Who's buying Zillow? So my point bringing this up is that I think we've got these very, given up stocks, given up for dead stocks in a sector, which is, let's call it the digital real estate sector, where there is actually an interest. There's people willing to buy. They're looking for. That means into any change, however small, an improvement on the business side. I mean, at 0.15 times sales, at 0.05 times sales, 90% down. I mean, these are speculative as, that's the curse word, which I'll keep clean, but still. There's a shot here to make big money, because just remember, everyone, if you go and look at it, people focus on the wrong thing. They'll be like, Paul, but they've been losing money. Yes, to which the offset is yes, but the stock is down 90%. Paul, nobody's ever going to do this. I mean, like their business model. But nobody needs to necessarily like pick them. It can just be an improvement in overall housing, which is like, it's like, it's just bouncing along this like 30-year bottom. In other words, it's got to improve by, if it improves by 5%, 10%, these stocks could really take off. And we know that people, they're speccing this sector out. How? Because Zillow and Compass are doing okay. They're doing okay. In terms of stocks, they're doing okay. All right. I think that's all of what I have to show you today in today's Investment Tuesday, which is Open Door and OfferPad. Open Door, OfferPad, two speculative but innovative opportunities that I think are critical, really, for the housing market, for the economy, for the Trump administration to unlock all of these things. in success mode. Yeah, I mean, these things, how hard could they go? I mean, we're starting from 0.15 times sales, 0.05 times sales. Even if they got to 1 time sales, that would be what, either 6 or 20 techs, right? If you ever got to 2 or 3 times sales, right? I mean, just from existing sales, right? But imagine, like, the real estate market unlocks, it's not going to be at current sales. It's going to be a much bigger number. And nobody is counting on that, which means nobody's in the stock. So as they come in, shorts will have to cover, new buyers be forced to bid up. And who owns the stock? Well, at current prices, it's people that look at the world like this, like me. In other words, we're looking at it from a different angle, viewpoint than anyone else. So those folks, yeah, I mean, they have conviction. Then there's people who, yeah, I mean, long-term money, which will be like, hey, yeah, this market and this part of the economy is ripe for disruption, ripe for change. And then there's our friends, the dealers, right? I mean, who's buying OfferPad and Open Door at $1.15 or $1.80? None of you are buying it. Nobody wants to buy it. Yeah, they're like, yeah. When demand comes in, do you think they're going to charge you more than $1.15 or $1.88? You bet. You bet. And the bigger the amount you want to come in, which of course will come as results improve, they'd be like, yeah, $3, $4, $5. So you got to be in when it doesn't look good. You got to be in when nobody wants to buy. Yeah, to make big gains, you got to start from very low prices. You got to start from very low prices. All right. I hope you liked this show and tell, if you will. Thank you all for attending. This is Paul saying thank you and goodbye.